CFA Secretary
Good
Wayne
morning.
Fox.
Here.
Thank you, Treasurer. Tim Jennings. Harold Lavender. I'm here. Kurt Summer. Here. Michael Messina. Nick Teas. Here. Catherine Allen. John Bingaman. Here. We have 1, 2, 3, 4, 5, 6, 7. 7 members present. We have a quorum.
We could move now to approval of the agenda.
So move. Second.
Any discussion on the agenda?
Madam Chair,
Yes. Madam Chair.
for the approval of the minutes on the agenda, can we do those separately or individually, just because I wasn't at one of them?
Yeah, we can take 2 different votes, or actually there's going to be 3 different votes.
Yes.
I mean, I'm
Okay.
wondering, could we just mark her as abstained for one of the meetings? Is that possible?
Which one does she want to abstain from?
Madam Treasurer, we'll mark you as abstained for which meeting?
I was not present for the 3rd meeting.
On the 27th or 28th, right, yes, that one.
Okay.
Your regard, Madam Chair.
All right, so hearing no further discussion on approval of the agenda, can we take a roll call vote?
Commissioner Stephanie Garcia Richard.
Yes.
Treasurer Laura Montoya.
Yes.
CFA Secretary Wayne Probst. Yes. Nick Teas. Yes. John Bingaman. Yes. Tim Jennings. Harold Lavender. Here. Yes. And Kurt Summer. Yes. 1, 2, 3, 4, 5, 6, 7. The agenda is approved.
And now on to approval of the SIC minutes from the November 28th meeting, December 15th meeting, and December 27th meeting.
So move. Second.
A motion by Member Lavender, a second by Member Bingaman. Any discussion on the motion to approve the minutes? So, Treasurer Montoya and Secretary Probst are going to be marking.
How about if we make the motion to approve the minutes and act on them independently?
Sure. We won't have a quorum. If we have 2 abstentions, are we okay with that? Okay, I guess, yeah. Sure, whatever works.
I wasn't here November 28th, so I'm going to abstain.
All right, with those changes, can we take a roll call vote to approve the minutes?
Commissioner Stephanie Garcia Richard.
Yes.
Treasurer Laura Montoya.
Yes.
CFA Secretary Wayne Probst. Yes. Nick Teas.
Yes.
John Bingaman.
Yes.
Harold Lavender.
Yes.
And Kurt Summer.
Yes, with my noted abstention as to November 28th.
We have 7. So. They're approved.
All right. With that, we are going to move to agenda item 2A and turn it over to our brand new SIO to give his briefing.
Thank you very much, Madam Chair. And first off, I'd just like to say how honored I am to take on this critical role, and really want to extend my tremendous thanks to all of you for having the faith in me to maintain the incredible integrity that's been built to this organization over the last 13 years, and to try to build the team, which I know was the top priority for all of you on the council. Thank you so much. My brief is going to be pretty short today, but I got some good news and some bad news. I will start with the good news. Good news is that we had our House Appropriations and Finance Committee hearing. We got close to the budget request that we had asked for, but importantly, we got approval out of HAFC for the 6 FTE that we asked for, so that's great. And then also, we are hiring Amy Chavez Romero out of Legislative Counsel Service. She's going to come in as our Deputy General Counsel. And she is currently deputy at Legislative Council Service, for any of you who don't know her. I've had the opportunity to work with her. She's going to be an amazing asset for the SIC. So we look forward to her coming on board shortly after the session. We have some other positions posted that we're advertising for. We do have a number of vacancies, as you all know, so we're going to try to eliminate as many of those vacancies as possible before we get those 6 new positions on July 1. And then, in unfortunate news, the Speaker and the President Pro Tem have appointed Alan Sanchez and Kelly O'Donnell to fill in for the seats that Member Lavender and Member Jennings currently hold. So I know I'm very new, but on behalf of the team at SIC, I would like to extend the gratitude of the staff for the great service that they've performed over quite a few years, and want to, with your permission, Madam Chair, open it up to any members of staff or council to say any words of thanks for them.
Sure.
Harold, I really have thrived on your energy and enthusiasm every day in these meetings. It's just a jolt of fresh air to see you, and I'll miss it. I've only had the chance to serve with you for a few years, but I've learned a ton from you and really appreciated the opportunity to serve with you.
Thank you, John.
Madam Chair, Harold, you've been great to work with almost my entire time here. You've been on board and just so supportive of our program.
Thank you, Vince.
Madam Chair, I've only served with you for a little less than a year, but I'm impressed by your diligence. Congratulations.
Thanks, Kurt.
I would like to thank you for your service to our state for all of these years and sharing your expertise with us. You've been here since the money wasn't very high, and through good times and bad times, and good markets and bad markets, and I appreciate all of the work that you've done to help serve New Mexico and to help this portfolio to grow. Thank you.
Thank you, Laura.
Madam Chair, I am so sorry to hear this news. Over the past 4 years, Harold, you've really been sort of a mentor to me, and you really were welcoming to me as I joined the SIC as a newbie, and thank you for that. Your leadership on the investment committee is pretty remarkable, with where you were able to help steer the SIC from, years ago where things were different to now where most of the time we're talking about really positive things, in terms of the SIC's benefit to the state of New Mexico. So thank you very much for everything you've shown me, and best of luck.
Thanks, Nick.
First of all, congratulations to John on that first hire. I can't believe you got her. I've known her for 20 years. That's a great hire. So if I would have known she was available, I would have tried to hire her. Sorry, you beat us to it. But, Harold, like others, I've only worked with you for about a year. We use the word fiduciary a lot. Mr. Sommer can give us a legal analysis of what a fiduciary is, what that means. As I understand it, it's the highest duty under the law that anybody can take on. And you have certainly served as a fiduciary in the highest sense of that word during your entire time here, and I'm honored to have been able to spend a little bit of that time with you. Best wishes to you.
Thank you, Wayne. If I might just say a couple words, if that's okay, Madam Chair. It's been an honor to be in this, to have this job or to have this position for this amount of time. I can't say enough about how wonderful it's been to get to know the council members I've had the opportunity to get to know over the course of time, and there are a bunch of us, and a bunch of you, many aren't in the room now, but it's been an amazing 12 years, a little over 12. But the fact that we've been able to do things right is that I think that's the highest calling, is you do the best you can and you do things right. I'd like to make a special, say something special. It's been an honor to join this council it's been a privilege to get to work with Ben Smith and with Steve and his staff. The state of New Mexico is so incredibly lucky to have the people working for and with us that we do. Vince, I've said this publicly and privately, but when I was on the Board of Trade, Board of Directors from 94 to 2000, I got to know all of the chief investment officers and all of the CEOs of all the big Wall Street firms. Went to New York about every 6 weeks and did a lot of work outreach. And I can say unequivocally, without a doubt, I'm going to embarrass him a little bit, but he's a great pal. Vince Smith's as sharp as or sharper than anyone with whom I came in contact in all that time frame. And I think that we owe Vince a great debt of gratitude, and the fact that he and Steve were able to put together the staff that they have has just been phenomenal. So I obviously have mixed emotions. I really have enjoyed doing this, but I'm really happy that I had the opportunity, and I won't be here, but I'm not going away. So thanks, and thank you everyone for the kind words.
I've got two more things very quickly, Madam Chair. First, I'd just like to thank all of the staff at the SIC. I had a chance to meet with everyone yesterday. Very warm and welcoming, and it cemented what I've been told by everyone was that the SIC really has a great team on board. So really enjoyed getting to meet everyone and look forward to getting to know them as time goes on. And the only other thing I want to mention right now is that we finally, for the first time ever, for a month, for an ending month, crossed the $50 billion mark for our net asset value. For ending December 31, we had net asset value of $50.041 billion. So that is pretty remarkable. And the wonderful team here has just done a fantastic job of both safeguarding and building our permanent funds and other reserves. So really want to give congratulations to the team for their remarkable work over the years. And Madam Chair, with that, I would turn it over to Ms. Smith.
Let's see if you have any questions on your presentation yet.
Great, well, thanks, John, welcome. Thanks, Madam Chair. Normally at this time, we talk a little bit about what's happening out in the world, but at a high level, and talk about, how that's affecting our investment. But today, based on some work that our brand new investment strategist, Ryan Eustace, who's sitting over there in the corner, did yesterday, I want to talk about something else. And that is, if you know very much about financial history, one of the conclusions that you will draw very quickly is that people don't learn their lessons. And actually, I think people learn their lessons, they just don't pass them on. Back in the 1920s, as you know, the stock market went to very high valuation. Driving the market at that time was the railroad stocks. So the railroads were being built out here in the country at a high pace. Those companies went to the bond market to borrow money to build those railroads. They sold equity stakes in their companies on the stock market. Those stocks just went to the moon and really led that stock market to one of the highest valuations we've ever seen in 1929. And of course, we all know what happened then, right? We had an 80% decline in the stock market, not solely because of the railroad stocks, but stocks went down 80% at their lowest level, and we had a Great Depression in 1929. Move forward to the mid-60s, 35, 40 years later, I think the people in 1929 learned their lesson about high valuations, about concentration in the stock market. But they didn't pass those lessons on because it happened again. This time, the stocks were called 50-50. And I wasn't a specific list of 50 stocks. If you asked 100 investors, list out the Nifty 50 stocks, you'd get probably 100 different lists, but they'd be pretty close. Most of the same companies would be on there, a little bit of differences. Those stocks went to the moon, 50-plus price-to-earnings ratios on these stocks. By the 1990s, half of those companies were out of existence. They had gone bust. Stocks went to zero. The other half underperformed the market along that time frame. From that peak in sort of the late 60s, early 70s peak, and of course the final crash in 1982. Fast forward again to the 1990s, we did it again. 1997, 1998, 1999, it was the tech and telecom stocks, and I was managing stocks at that time in Texas, and it was awful. You could not own those stocks. Well, you could, but you don't perform so badly, you lose your job. It was almost as if people were forced into these, relative handful of stocks, 40, 50 stocks, all tech and telecom related names. Of course, we know what happened in 2000. Market decline of 45%, nasty recession, and a lot of those companies out of business today. Well, we're doing it again. And this is the work that Ryan did for us the other day. Now, we've known this for a year, but there are 7 stocks in the market now that account for almost all of the investment performance of the stock market. We're talking the S&P 500. Those stocks are Alphabet, Amazon, Apple, Meta, Microsoft, NVIDIA, and Tesla. Those 7 stocks incredibly make up almost 45% of the total market value of the S&P 500. The other 493 make up the other. Virtually all of the performance of the stock market in 2023, which is pretty good, virtually all that performance came from those 7 stocks. I've never seen a stock market this top-heavy, this concentrated. The other feature about all those other times, I was telling you about the 30s, the 60s, and the 90s, valuations at those periods were very, very high also. So we saw our highest valuation, at least on the Shiller ratio, at 44. Today's stock market is almost that highly valued. We're approaching 40 on a Shiller basis. So same thing happened in the 30s, what happened in the 30s, the same things happened in the mid-1960s, it happened again in the late 1990s, we're seeing it again here in 2024. So we've already done something about it. We've lowered our exposure. So while a number of our peers are still 30, 35% maybe exposed to the U.S. stock market, some even higher, we're 17%. Really lowered our exposure to that fundamental on the stock market. The second thing is, everyone over the last probably 15 years has been driven to index their equities, particularly U.S. equities, just on the pressure of underperforming if you didn't. Active management just didn't work in the U.S. stock market over the last 15, maybe almost 20 years now. I have to look at the charts, but everyone's been forced into that index, meaning they're exposed to 7 stocks at their current market weights, 45% of the market. We're not totally indexed. We still have some active management in our U.S. equity portfolio. So we've done something about it, but it's really something we should just continue to be aware of, that we stand this risk in U.S. stocks today. So I don't want that to be a negative message. I just want it to be an informational message that this has happened before. We've seen the results, and we got it again. We should have some expectation about how this might resolve itself this year and next maybe. So that's what I have for you today. I'll take any questions.
So that is your.
You want me to? I will, sure. Yeah, so we're still seeing some weakening, particularly here in the U.S. Germany and a couple other countries in Europe are in recession. We still think that's happening. Many economists have come off their recession call. We still think that's in the cards this year. We're still seeing it in most of the indicators that we look at. So that's basically what's happened. Of course, as you know, we are absolutely flush, cash and bonds. That's what you hold when you go into recession. So we're well positioned for what things coming. Yeah, they've been coming down a little bit. There's a macroeconomist that we follow pretty closely. He did a study, multi-country across, last 60 years. I think there's like 20-something countries in there. Inflation comes in 2 ways, almost always, across different countries, different time frames, different economic conditions, preceding the inflation. It always comes in 2 ways. You get a wave, comes back down roughly to where it was, and then it goes a little bit higher, and then it comes back down. So best expectation is we got another wave coming.
Other questions for Vince?
Madam Chair?
Yes.
Vince, where do you see the real estate market, commercial real estate market, taking the banking industry?
So we talk about this you know, the period after the great financial crisis, was one of moral hazard, what we call moral hazard. And it's just when, you know, whether by design or accident, you know, the Fed and the government and central banks and governments, I guess I should say, because it happens around the world, create conditions where people will do things that in normal times would just be crazy, and because the conditions allow it, right? So we had 0% interest rates, you know, post the great financial crisis for 7 years, and we had the Fed opening its balance sheet and taking on any debt that people wouldn't buy from the government so that they could overspend their income. It was conditions of moral hazard, and the real estate market is very highly levered now. They're facing, you know, debt rollovers coming up soon. So, you know, we've seen a good bit of trouble, and you've seen the returns in our real estate space that we haven't been terrible, but they've been a little bit weaker. Probably some still coming. You know, we don't think our strategy group doesn't think the interest rate increases have been fully priced into the markets. It takes a while for people to roll their debt and have to face those higher debt payments. So I think it's probably a little bit more to come, but we've already seen quite a bit.
I know that we have a lot of different metrics on the for the performance reports and things like that. And you provide us some indicators on, you know, the market and economic indicators, and, you know, talk about the PE, you know, the Sharpe ratio, or, you know, and how that is important. What other ones are you following to kind of give you insight into the market, things being overvalued? Like, what other metrics do you really look at?
Every Wednesday at 11 o'clock, our strategy group meets, and we go through a packet of, I don't know, it's up to about 50 pages, guys, and I'll send you our next packet. That'd be helpful? We'll set it out to everybody.
Yes. And then, Madam Chair, it may be early, it's John's first day or second, but I want to see if we can maybe have some conversations about each strategy and how the council can function within that strategy. I think that's one of the roles that we play, and so I don't know if it's bringing the strategy group to kind of talk to us or something different, but I'd like for us to start kind of considering that. That's all. Thank you.
All right, hearing no further questions, we will turn it over to RBK for our monthly performance report, and are we going to start with you or online?
Yeah, I'll start.
Okay.
Yeah, thank you, Madam Chair, and thanks for the comments. Good morning, everyone, and it's great to see you. Carol, I just wanted to very briefly say that you've been such an asset to this council. I've had the pleasure to work with and for you for over a decade, and it's been a great experience. Your stewardship has been tremendous. I think will leave a lasting impact on these funds, no doubt, and will be missed.
Thanks, Matthias.
Today we have your November performance summary in the packet, and as always, we can spend a little bit of time on the capital market environment. I think that's starting on page 27 of diligent and your meeting materials for those following along. I'll make some comments on that, and then Marcia will provide you a bit more detail on the fund performance. If you're on that page, on the bottom right-hand side, you should see a table entitled Market Performance that provides you with all the trailing returns for the major asset classes represented by the indices. I think right away on that page, you'll see that you have some substantially positive numbers in that second column titled MTD, which is month to date, essentially representing the month of November. And a lot of that is due to a shift in market sentiment to more risk on, and some of the inflation numbers that were just discussed have continued to come down somewhat, and quicker than expected, although, as Vince mentioned, that may be a bit of a head fake, and you may see that number come back up. The hope there being, of course, that could lead to perhaps some additional easing in 2024, so the year that we're in here now, and provide some interest rate cuts, which of course would be supportive to most of the asset base that have come under pressure for that. So you can see 9% or so across the equities just in the month of November alone, and that's extended the year-to-date, which is down under the CYTD calendar year-to-date, so representing the first 11 months of 2023, really into double-digit territory. So very strong returns, particularly for U.S. and large cap stocks, although quite concentrated by the Magnificent Seven. So it wasn't broad participation by the market, but really just a few names driving that. It's nice to see that. We really don't care too much where the returns come from. There's also a lot of risk around that needs to be acknowledged and managed properly. Active management or sort of positioning away from some of these things and rebalancing periodically are good ways to limit your overall exposure and make sure that you're benefiting from these gains long term. It also led to global rates moving a little bit lower. You can see that on the top right-hand side in the yield curve chart, and really saw the 10-year sliding down from nearly 5% or so just in a month earlier in October to 4.5%, almost 50 basis points just in the course of a month. And as we know, rates and the price or the return move inverse of each other. So as we had those rates come down, we saw not only equities but also the bond market really, or in particular duration-sensitive bonds and fixed income moving up. And as you look at your performance across both your public and your private fixed income portfolio, you'll see that ring true. December, I know you don't have the numbers here, but it's probably a little bit more timely in terms of there. It was much of the same relative to what happened in November. Traditional assets continued to rally, put on another 5% or so on an average basis, and really ended that year quite strongly. So we all pleased to see a strong 2023, but are also I think realistic about what the current valuation could mean and the type of positioning that might be relevant moving forward. Cash is still yielding north of 5% roundabout on an annualized basis. That's very attractive when you think about where cash rates have been and on the back of decreasing inflation. Now you have real yield where inflation is below cash and you're not losing your purchasing power by being in cash. And as you know, you've had quite a bit of inflows that have taken some time to put to work, and so now that's not a drag on returns. It's really an opportunity for when markets reprice to be able to buy in at attractive entry points. So I think that's helpful to acknowledge and really provide some wind at our back in terms of going into this type of market that we expect in and beyond. But it is, when you have returns like this of 9% in a single month relative to 5% in a year, it's difficult to keep pace with that. While it's not a drag on the portfolio, obviously 5% on an annualized basis is different than 9% just in, I think we have to acknowledge that overall. This is a portfolio that's built to be diversified, participate meaningfully on the upside, but it's not, as has been said, so concentrated that you're going to have these wild swings. And so I think November and December to some degree as well, a bit of an outlier. I think they're nice when they happen, but recognizing that that's not an environment where you're going to be at the top of the heap, and you shouldn't be, but you're participating meaningfully. Your asset allocation, the way it's designed, and it serves you very well when you look at your overall performance in your relative ranks compared to a lot of other funds on a risk-adjusted basis. When there was mention of Sharpe ratio and other metrics that we look at, you consistently rank very, very high there, and that's because you have some downside protection built in. You're not going to fall apart like some other funds that have very heavily committed to publicly traded equities. We're much more diversified in terms of where you get your beta, but also where you get your outperformance across your asset allocation. So we think that's helpful. As I said, the cash position is not really a concern at this point. Of course, we'd like to get to the long-term target interim targets to help with that, but we do think it's really an opportunity, and a positive thing for, being able to deploy capital quickly when markets, might go the other way. I'll stop here. Thanks for the time, and, happy to take any questions or comments before Marcia provides some additional details.
Marcia?
Madam Chair, if I might, I'd like to say that, I'm sorry I'm not there. I tried, got as far as Chicago, and then, yeah, it's a mess for traveling right now. So my apologies for not being there. I'd also like to say that, I love my job because I learn something every day. I learn from my coworkers, I learn from the market, learn from staffs that I work with, but I also work with a lot from boards and council members. And Harold's been a great teacher. So thank you, Harold, and thank you for being that teacher. With that said, when we go into the report that you have in front of you, any monthly report is, as we say, we call it preliminary in a way, because as you know, real estate, some of the private equity, those are held at zero. They're valid. We give you when we do a quarterly report, we're able to update those returns. So this is a final flash, but it still is a monthly report, so we don't have updates for many of the privates. So with that said, I'll be pretty brief here. I also want to point out some changes we made to the flash and will continue to make based on the conversation we had last time we met in, gosh, was that November, about the investment policy. So if you go to page 29 and look at the right-hand side, looking at the allocations for the land grant and the severance tax, you'll see now that we've showed the interim target, but we also show the long-term target, so the council can see how that interim target is moving closer to the long-term target. So that'll be in front of you on a monthly basis. I wanted to point that out. And looking at on the land grant, as we get into performance, you'll see relative to the interim target, and certainly to the long-term target, being underweight, as both Vince and Matthias spoke to. The market kind of surprised us in November and December a little bit by being strong in the public equity. You'll see that on the land grant, you were slightly on the US and more so on non-US to your public equity allocations. And so that'll speak to short-term performance. That is shown on the bottom of diligent, is that 28, 29, where you can see that the land grant monthly return was 3.78, underperforming its policy benchmark for the month, the quarter, and fiscal year to date. If you look at the attribution of that, having cash was a bit of a headwind when the equity markets turned out to be so strong. You're trying to deploy that cash as quickly as you can, but for the short term, you can see that was a bit of a headwind for the land grant. Severance tax, although long-term underperforms the land grant, you can see for the month and the quarter actually did slightly better than the land grant, and actually outperformed their benchmark for that time period. Again, the severance tax was not as underweight to the public equity markets as the land grant. Again, that is just a fact of trying to get the assets deployed prudently. On the following 2 pages, you can also see the allocations. Where there is an interim target, we show it. The others are just the target allocations. So we'll from now on be very clear. And if there is also focus on the long term, so we can keep track where you are versus that long-term target. Pages 32 and 33 look at a calendar year to date. So 1 month shy of a full calendar year in the performance. Again, if you look at the different funds, the driver here is exposure to equity. And you can see the more conservatively allocated funds did not perform as well as the more diversified, but have more risk exposure. But going to page 35, I'm sorry, I'm looking at this in a dark hotel room. We show composite performance on page 35 and 36. On 35, just a couple notes here on the U.S. equity and non-U.S. equity. Speaking to just going along with Vince's theme about the 7 stocks, a good portion of your U.S. equity portfolio is indexed, as you know. That has changed, so you can see, the performance recently has, not for the month, but has beat the benchmark or been in line with the benchmark. So again, it has over the last few years become more passively managed. So being passively managed, you had exposure to those stocks that did well. Now your active managers, many active managers chose not to be index weight of many of those stocks because they're very expensive. So if you look at the individual performance, especially on your on non-US, or some of your active managers your active manager on the growth side underperformed. But so that explains some of the underperformance short term, just 1 month on US, but on the non-US as well. Looking at your fixed income, some underperformance there. Remember, you're going through structure changes on the public markets. Having exposure to short duration was a headwind for you for the short time period. And again, on the private, that portfolio is transitioning and that there has been a benchmark change. The following page is, again, that's, you'll see a lot of zeros. That again is the privates are not valued, they're valued on a quarterly basis. So we're showing 0 during the months, inter quarter months. Just a couple comments on the attribution. Again, this will be in the executive summary when we do December performance and we have your privates. But I'd say the driver of underperformance for the month, and we don't really focus on the month, but the green is your performance, the blue is the your strategic allocation target, and then the 3 explanations of any over or underperformance. The tactical allocation, as Matthias has said, as I've said, that's not being tactical. That's just simply saying, are you at your target allocation? And we know for the land grant you haven't been. You've been underweight slightly to the equities as you're deploying that cash. So that was a headwind, slight headwind. Something we won't see when we turn to the next page. The far column is your manager value add. That was a slight headwind for you during this period. Your managers were pretty close, some slightly underperformed. Again, here, the biggest underperformer for that month was your private fixed income, and I just spoke to that. If you go to the next page, page 38, here for the year, you outperformed that benchmark, and a negative for you was not being at your target allocation. That's the yellow column, that's the yellow bar. So not being able to deploy that cash was a negative, but if you go to the far column, you can see your managers added value and overcame that. So managers did a great job for the 1 year period and participated and helped you outperform the benchmark. Just a couple things I want to point out too as well. If you look, we never go into the individual manager performance, but just confirming some of the things that Vince was talking about the 7 stocks. It's very hard to read, but in your active and your large cap US, you have T. Rowe Price large cap growth, and you can see some underperformance there. Again, and many active managers chose not, because of PE ratios, etc., not to hold many of those expensive stocks, even though they're growth managers. They are sensitive to valuation. You can see the underperformance there. If you turn the page, there's also on the active on your international, there's same story. is true there for some of your active managers. So they didn't participate on those, the market favoring those 7 stocks. The other thing I'd like to point out, I'm taking more time than I said I would, but on page 44, wanted to point out on the very bottom of that page where it says ETI, we're always going to make sure whether it's a flash, whether it's executive summary, or the full performance report that's very clear of the including the economically targeted investments and the severance tax, New Mexico centric private equity. So those are, I just wanted to point those out, and they will always be in each of the reports. With that, Madam Chair, it's good to see you, even be it on screen, but we'll take any questions. And welcome, Mr. Clark.
Questions for RBK? Hearing none, we'll move, yes, I'm sorry, Mr. Secretary.
I'm sorry, Madam Chair, it's not so much a question for RBK, but, and I know that, Charles and others are doing this, and Dawn did an excellent kind of recap of what's been going on in the session, but as most of you are aware, the flavor of the last session or two has been creating various funds to park today's money to be used in the future, which the executive strongly supports, and good work has been done in that area. But there's a couple that kind of want to flag. The higher education trust fund that's been proposed this year. There's both in the executive and legislative recommendation, there's an additional $250 million for the Land of Enchantment Fund. This one doesn't so much impact the SIC, I don't believe, but yesterday House Bill 196 or 160, I can't remember, Representative Small, establishing an expendable trust. One of the reasons I bring these up is because whenever I hear about, and there's a transportation trust that I understand is floating out there as well, one of the things I always ask is, has the SIC taken a look at this? Has the SIC done an analysis on potential return on investment and how much needs to be capitalized in order to produce the kind of revenue to fund some of these programs? And too often I hear no. So just been to know that I'm always trying to send them your way, because I think, unfortunately, there's a perception out there that we just put a pot of money aside and it's somehow going to grow and solve all of our problems and help. But just wanted to flag that, Madam Chair, that there's a lot of these things out there, and I think it's very important that John and his team have a free and strong voice in terms of facts, your staffing levels, and workload, and all of that, but also the potential benefit to the.
For that, well, I don't know if does anyone want to respond?
Sure, Madam Chair. We have been tracking 16 different bills, including the ones that Secretary Frost has referred to: Children's Trust Fund, Transportation Trust Fund, Water Trust Fund, Conservation Legacy Trust Fund. Those are all coming up today and tomorrow. So lots going on. Things are moving quickly. We have stayed on top of our FIRs thus far. Thank you, Dawn. And so we are identifying, the fact that we will need additional resources, that we can probably handle most of these funds through the normal budgeting process. The other issue that's often not addressed, however, who is the actual client? Who is the beneficiary? And are they going to work with SIC as far as giving us direction? Because oftentimes they don't. It's not very specific. And so that is a concern, and we've been kind of flagging that, just that we need some kind of guidance on risk-return metrics, and we'll get a little bit of feedback in that area.
The other important aspect when we're looking at these pieces of legislation is it short-term or is it long-term? And people don't recognize the difference of investing short-term with the state treasurer's office, investing long-term with the SIC, where you have the opportunity to take more calculated risk. And I think a lot of times the standard that they're just putting it all in SIC, and that's not necessarily the best benefit for them. The second part I would say that's really important is CFA, SO, and SIC have to work as a team and collaborate, especially on these big lump sums of funds. And a lot of times they're putting the amount of debt issuance on the same month that we're not having as much cash. And right now that doesn't affect us negatively because interest rates are high, so if I have a lot of money in cash at the bank, I'm making a good return. The difference is that when markets change and I have a lot of cash in the bank at a low rate because I have to pay bills that month, it negatively impacts what I could be putting in the portfolio at a higher interest rate. So those are just some of the things, if those of you that have friends that are analyzing these bills take a look at. I think that would be really helpful for the long term. Any further? All right. Over to our investment committee, agenda item 3A.
Thank you, Madam Chair. I just neglected to say that, before, that the, quality of the investments that we see is due to the quality of our staff working with the quality advisors that we have. Makita, Townsend, RBK, and Mercer. I just want to say that, once again, I think we're really lucky to have that quality of, advice, and advisors in our group of funds. Moving to item 3B, we have, 3 voting items today, private credit, and then 2 private equity investments. So, we can turn that over, I think, back to, Tom Lofton. Or to Ben, here we are, yeah, there we go.
Would you like to chair this meeting, sir?
I'm sorry about that. I stepped on your toes a little bit, I apologize.
Mr. Lofton, whenever you're ready.
Thank you, Madam Chair. So, today with me, I have, normally we have Mary Bates from Makita, here. She's in the Columbia Gorge in Oregon, and I don't know if any of you have ever been there, but it is tailor-made for ice storms. So she's had some difficulty getting out. We didn't want to put her in danger's way, so, we had her, join us remotely. Mary, are you with us?
I am. Thank you, Tom.
Okay, great.
It looks like the sun's shining there.
And it does.
Those would be the lights.
I think it's stalling a little. But, thank you. Thanks for being on, Mary. I'm happy to not be doing this by myself. So from Oak Hill, Advisors, we have John Pasella here in person, and then, remotely, we have Alan Schrager, who's the lead PM and one of the senior partners at Oak Hill, Advisors. And then we also, to answer any questions, we also will have Nadav Braun on the line as well. So to get started, staff in consultation with Makita Investment Group recommends a commitment of $350 million to Oak Hill Advisors Senior Private Lending Fund, also known the acronym OLEND. Manager, Oak Hill Advisors, has been a specialist in credit investing now for over 30 years. They, frankly, from my personal experience of having been familiar with Oak Hill Advisors, speaking with peers in the industry, Oak Hill has an excellent reputation when it comes to providing. They've been in business for over 30 years as one of the top credit specialists in the business. This OLEND strategy will focus on sponsored first lien, senior in the capital structure financing to upper middle and upper market companies in terms of size, with the premise that larger companies historically exhibit greater resilience. OLEND seeks to capitalize on the large and growing opportunity for senior private lending to larger companies. The Oak Hill OLEND strategy commitment is going to be assigned to the direct lending category within the private debt market strategies portfolio. Oak Hill has created a structure with OLEND that allows for the things that some of the key priorities that SIC, as far as private credit, is seeking out. It allows for recycling, and it has evergreen characteristics. Key statistics that we pointed out to, the staff pointed out to the council back when we did the fixed income structure study. OLEND will target net returns after fees of 11 to 14%, and it's going to be a strategy where income is responsible for the majority of the return. That's another characteristic that we private credit. So with that, if there aren't any questions, I'll turn it over to Mary Bates or Nikitas.
Great. Thanks, Tom. I'll keep my comments brief. Tom's already mentioned a number of things as it relates to the fund. So just as a reminder, this fund is targeting 11 to 14% net. Tom's already highlighted this fund focuses on sponsor-backed companies. From an industry perspective, the emphasis is on less cyclical and more cash-generative industries such as software, healthcare services, and business services. Those are the emphasized sectors. There certainly are others as well. A U.S. focus, roughly 90% of the companies are expected to be domiciled in the United States. Highly diversified with over 100 investments expected, and this is a levered fund targeting 1.5 times net or debt to equity. Excuse me. Tom's already referenced a bit about the structure. We won't go into detail because we are in public session, but this is a hybrid evergreen structure with a 3-year investment period and an automatically rolling 2-year investment period until the investor opts out. The manager has indicated that they will offer a recycling of income, to be clear, option at the request of New Mexico. So to highlight the strengths of this offering, Tom's already alluded to the longstanding credit experience of the investment manager. OHA has over 30 years of experience. During that time, they developed deep relationships with private equity sponsors as well as management teams with an emphasis across their history on larger companies. The manager has a track record that dates back to 2002 as it relates to private lending. Tom's already referenced this as well. The resources of the organization, over 400 employees, including roughly 120 investment professionals. The team is structured as industry-focused investment teams. We do find a number of the terms favorable. We won't, again, go into the details around this because we are in public session, but a number of the terms are favorable for SIC given its size. Some of the weaknesses or concerns that we would highlight, we would, bring to the attention of the SIC that this is a first-time fund for OHA. It's a first-time commingled fund, and the manager did not have dedicated private lending fund, a commingled fund, until 2019. And the composite that's presented or the track record that's presented is a composite. So we do discount some of the track record. That said, I think what we don't discount is the loss ratio for the manager, and effectively it's negligible. It's approximately 1 basis point since 2002. So we think that's a very strong statement about the manager's very conservative credit quality, credit underwriting, and their strong underwriting capabilities. We would highlight that the manager did transition ownership. It's been approximately 3 years ago, but now OHA is a wholly owned subsidiary of T. Rowe Price. We would highlight on the mitigating side that the manager does operate autonomously and has done so since its inception. And moreover, Glenn August, the CEO of OHA, sits on the board of T. Rowe Price. So with that, happy to address any questions that you may have or turn it over to OHA.
In your remarks, if you would just maybe address some of those, the managerial changes and how that's impacted, I don't know how long you've been.
So
just quick introduction. So I've been with the firm. This is my sixth or seventh year. I cover the West Coast, based out of the Bay Area, and work with all our clients on the West Coast. Joined by Alan Shager. Alan's one of 4 partners at the firm, and he's a PM, and he leads our private credit business, as well as Nadav Ron, who is our lead research analyst across our most prolific sector, software and healthcare. I'm happy to go a little bit deeper into the firm, and then we can obviously address the T. Rowe Price question as well, and I'll turn it over to Alan and go a little bit deeper in terms of our strategy and our track record. So, as Mary and Tom said, we've been doing non-investment grade credit for 30 plus years. I think that's important because we managed through multiple cycles over that time period. Obviously, there's been a number of dislocations throughout that period of time, and we've really had a consistent process team in place, which has driven consistent results over that entire time. The philosophy really is to buy companies, not securities. So, as Mary and Tom indicated, we have an integrated model. What that really means is that we have one team. Everybody's rowing in the same direction. We don't have silos, and we really take an industry-focused approach to everything that we do, with really deep underwriting, really focused on downside protection. In terms of the scale of our business, we're $63 billion. We think that's the right, in terms of scale, to be relevant, but also be nimble. As was highlighted, our team is now 420 strong across the organization, 120 investment professionals. Those are primarily based in London, or New York and London. And if you look at the bottom of this page, private strategy is now the biggest part of our business. There's a lot of synergies across what we do on the liquid side and the structured credit side of our business, and we really sit at the intersection of public and private markets, which is really important for prosecuting this strategy in terms of O-lens. In terms of the team who's leading this strategy, Alan, who leads this, along with Eric Mueller, there's a team of 6 on the investment committee. I would highlight an important number there, that the average number of years at OHA is 19 across those 6 individuals. So this team has been in place for a very long time, working together. I've really started and grown up together at OHA over a number of years and decades together. They're supported by the whole organization. So we have specialists across the private credit part of our business, 18 industry specialist teams, and dedicated structuring execution specialists as well. So everybody's really focused on this strategy and delivering the objectives. And with that, maybe I'll turn it over to Alan, and we can address maybe the T. Rowe Price towards the end.
Perfect. Thank you, John, and thank you to everyone. Really happy to be here today. Tom, Mary, and John did a very good job of describing us. I'm on page 5 on the presentation, and I will quickly go through a number of the items, some of which have been mentioned already. We've obviously been doing this for a long time. We have been focused on large cap, what we call large cap companies, for that entire duration over those 30 years for the most part. And that consists of companies that are about $75 million or greater. We do that in this integrated model. The integrated model allows us to touch these companies multiple times as they move in and out of different markets, whether it be public, private, stress, or distress. And that opportunity leaves us a lot of knowledge on each of these individual companies. We get to touch management teams, owners, competitors, customers, and ultimately the sponsors throughout that process. And over those 30 years, we've developed some very deep relationships. We've been doing that for a long time, which creates a lot of trust when people know that you're going to be there and continue to be there. We do, on the private side, value incumbency. We do think that it's very valuable that we know these businesses. A large portion of what we do day in and day out actually is with companies. Over 50% is with companies we've already touched previously. And we do think that is a huge competitive advantage. And we're sort of leading each of these deals, which gives us an opportunity to be a solutions provider for each of these companies. That's sort of an overused term. But what it really means is listening to what they need, and in essence, not forcing a product on them, but forcing a thought process in terms of how to finance themselves. As was referenced, our returns over these 22 years in this track record are very good, driven by de minimis loss rates. We'll go through that in a minute when we show that slide. It really comes from utilizing our industry expertise, where we have a real knowledge of the businesses. We are not generalists. Our teams are very, very embedded in each of the individual industries. We have 16 different industry teams, and many of them have 3 to 8 people on those teams. One of the other things that you'll see in conclusion on this slide is that we've been doing distress now for over 30 years, and that gives us a real good perspective on workouts. And while we haven't had a lot of mistakes in our investing portfolio over the 20-odd years of private credit and over 30 years in investing, when we do, we have this distressed experience, which allows us to move that forward. So I'm on page 5, I'm moving to page 6. OLEND, as Mary referenced, while this is in essence a one-time commingled fund or the first generation of a commingled fund, we have been doing this for a long time. This is just the natural evolution of our business, where we've done it mostly in funds of one and other types of commingled vehicles. But we've been lending to these large cap businesses in both public and private form for decades. So I go to page 17. I'm going to skip a little bit into the non-public session slides, but we can talk publicly about the performance on page 17. As you can see, the performance in an unlevered fashion in our composite, which is in essence every asset that we've bought since 2002. So while there are some comments regarding it being a composite by Mary, our view is this actually does not eliminates all cherry picking from assets, because we're showing you everything we did in the asset class over the last 20 years. As you can see, the performance on an unlevered basis and in both overall private credit as well as first lien private credit is very high relative to when you think about where risk-free rates were over the last 20 years, save the last 18 months. And as was discussed, it comes with, in essence, 0 of a loss rate. All the way to the right, the third fund of one, that is a non-commingled fund, but a fund with a very similar strategy to what we're talking about here in OLEND. We call this the OLEND Fund of One. This is a large state pension fund that has been investing with us for a number of years. This particular fund, as you can see, is a levered fund, so you can see the returns that can be generated. And that fund as well has no losses across the decades, across the time period for this. I go to page 18, and this is my last slide. We do believe that people should not forget the word credit in private credit, and that we've been doing this for a long time, over hundreds of billions of dollars of investing. It's come from a disciplined approach where we, in essence, avoid mistakes, and that allows us to provide the performance that you see here with top outperformance across leverage loans, high yield, and then our distress track record, which I referenced with regards to our workouts, is obviously a very strong track record over many, many years since 1990. All of these things aggregate to where we believe we're a disciplined manager deploying capital in an attractive fashion with a target range of 0 losses across our portfolio. And with that, Madam Chair and Tom, that is all I have. I don't know if you want me to answer the specific question that was asked, or John, if you want to answer that.
Alan, if you could, you're probably in the best position to answer that. Can you just elaborate on the relationship with T. Rowe Price and the future of Oak Hill under that umbrella?
Sure. Mary mentioned it. We are completely autonomous. Actually, T. Rowe has no control over us, investment decisions, pay decisions, anything related to our business. The reason that we did the transaction 3 years ago was to improve our distribution, as the benefits of size were apparent with some of our competitors. But T. Rowe Price has no impact on our investing, has no impact on our business. And the quote that I like to give is, we've now been in theory, owned by them for 3 years, and I've actually not spoken to a T. Rowe person during that entire time. Glenn deals with them as a member of the board, but I have no interaction running our investment business sort of day to day. That it really is a standoff investment for them.
So with that, we'll go to questions, and I had one, start us off with just if you could, or Mary could talk a little bit more about that reinvestment strategy that you're recommending. It's my understanding, so it has to do with ensuring that we're staying within our percentages or our allocations?
Given SIC's, we'll call it cash flush position, and asset-heavy position relative to its future liability stream, we want to enhance our returns over time by taking advantage of compounding. So in a typical term fund structure, you're going to have this draw up, you're going to have this investment, this draw down, and this draw back up. That draw down, that draw back up, that's where cash is sitting idle. Wherever we can find investments or structures that provide us with an out if we do need to opt out, but at the same time, we can keep monies invested. That's what Mary refers to as MOIC. That's going to our multiple over time. That's going to improve our multiple over time.
So there will be only a portion reinvested, or?
The income portion will be reinvested. The principal is going to be act in a normal term fund fashion.
And it's going to be for the duration of the entire?
Yes, ma'am. So what's going to happen is there's essentially and I've got to commend Oak Hill on this. We have these strategies in some of we have these vehicle structures in some of our asset-based strategies, and it's easier in an asset-based strategy because they're such short-term investments, they kind of roll. So that whole, if they pay down quickly, they can kind of be reinvested quickly. And Atalaya is one where they essentially create vintages, they create individual pools, and as this pool throws off cash, invest in the new pool, and that keeps the accounting more simplified. That also allows for when we have partners like Colmore that go back and verify fee charges, things like that, to make sure all that is audited properly. Having those rolling structures helps them to do that. In the past, we have not been able to find vehicles with these sorts of characteristics in a direct lending strategy. And Oak Hill sat down and we told them specifically kind of what's the best strategy for us that would allow us to keep monies invested, still allow for us to do a proper audit of these structures. And we pointed out to you guys that we like this structure that we were getting in the asset-based strategies. And frankly, Oak Hill was the first from direct lending managers. Typically, they came back and they said, well, we've traditionally done these sort of term fund strategies. Oak Hill came back with a structure that would allow us to reinvest income into rolling vintages. So that's why we say it's not truly evergreen, but it has evergreen characteristics.
And just, it brought up another question. Are we going to be charged each time? Like, do we pay that fee percentage each time?
So on the equity that's on the NAV that's invested, there is a fee charged just like in any normal investment management plan. Mary, do you want to give any comments or?
No, I think you addressed the question.
So, Madam Chair, are you asking if there's an additional fee?
Yeah, like.
No, there's not any quote unquote additional fee. The fee is always going to be charged on the equity and on our outstanding equity, just like in any investment.
The series are economically separate. So
Right.
the first series is treated differently, and then there's a separate series once you roll into the next.
tracking for carry purposes for the overall, so you'll be able to look at each vintage. The first vintage is for a 3-year investment period, and then as that winds down, you can reinvest in the second one, which will be economically separate from the first one.
Considered like a brand new.
It'd be a brand new waterfall, brand new performance.
That's what I was asking.
Yeah, exactly.
My gosh, I didn't realize.
Okay, all right.
And so we think it's the best of both worlds, because all the incentive is back-ended, not current like some other structures.
Sure. Question for Oak Hill, just on the fund level leverage, are you gonna be exposed to any mark-to-market risk, or what would trigger a default on the fund level leverage? You know, because there are times when these really high-quality companies can see their leverage loans break down significantly.
Alan, do you want to address that, or?
Yeah, great question. So we've been doing leverage vehicles. We actually were one of the first managers using leverage in the finance markets in the 1990s. So we've been doing leverage finance for a long, long time. These will be, for the most part, non-mark-to-market, non-recourse financings down in a subsidiary. So we will have great protections in terms of any devaluation or degradation of the collateral. But we will be doing a variety of different financings to access the financing markets in the most attractive way. Initially, we'll be doing it in a subline fashion because it is the most flexible and the cheapest. We'll eventually go to asset financings, which have triggers related to performance, but that are very out of the money. And in essence, you use a borrowing-based concept, so you're not conditioned on any individual asset. And then probably we'll move to capital markets transactions, either to the insurance market or to the securitized market, where there are no tests at all, other than cash flow tests. And each of those will be properly structured to make sure that we don't have a leverage event. We won't be that levered. Obviously, if you think about the CLO market being 90 to 92% levered, we'll be sitting here in the 50 to 57% leverage layer at its peak.
Thank you.
Yeah, this is Jennings. I came back in at 10 o'clock.
All right, we will make a note,
Thank
sir.
you.
Thank you.
Thank you.
Hearing no further questions on this recommendation, yes, Member Bingaman.
I'm sure I've got a motion.
Okay.
Based on the recommendations of the Council Investment Committee, Consultant Makita, SIC staff, and general fiduciary oversight of RVK, I move that the State Investment Council approve a commitment of up to $350 million to Oak Hill Advisors Senior Private Lending Fund, OLEND, subject to and contingent upon New Mexico legal requirements, New Mexico State Investment Council policies, negotiation of final terms and conditions, and completion of appropriate paperwork. Second.
Okay, we've got a proper motion and a second. Any discussion on the motion before the council? Hearing none, let's have a roll call vote, please.
Commissioner Stephanie Garcia Richard.
Yes.
Treasurer Laura Montoya. CFA Secretary Wayne Probst.
Yes.
Nick Tejas.
Yes.
John Bingaman.
Yes.
Tim Jennings.
Yes.
Harold Lavender.
Yes.
Kurt Summer.
Yes.
Motion passes. 7 votes in the affirmative.
Okay, very good. Thank you.
Thank you.
Thank you very much, everyone.
Thank you.
Thank you.
Now to agenda item 3C. And this is a private equity investment recommendation with Kinderhook 8. We'll turn it over to Mr. Cassidy and Mercer.
Good morning, everyone. First of all, you realize how long you've been here, but I moved back home 6 years ago. The time passes. First of all, I want to thank Mr. Lavender and Mr. Jennings for their service on the council. We really appreciate it. So we're recommending a commitment of $100 million to Kinderhook's 8 fund. This is a new relationship, or this would be a new relationship with the council. This is a middle market manager that's been on our wish list for years. As we build out the portfolio over the next strategies we want to be the core of the portfolio, more value-oriented, middle market buyout strategy. We have a good pipeline of firms over the next couple of years that we're going to try to add to. And, you know, Kinderhook's strategy kind of fits all the things that make a good private equity strategy. They have good industry focus and expertise. They have a deep bench of operating executives that help them build their companies. They utilize add-on acquisitions. They pay reasonably low prices. There's nothing crazy in the 7-8 times EBITDA historically. They use reasonable leverage, which leaves room for growth for the businesses. And a lot of their exits have been strategic, upward of 3/4, which is, you know, in our view, the highest quality way to get. This is also, these are the kind of strategies when we look at building out our co-investment portfolio that we want to be overweight as well. So that's one of the.
Chris, before I talk about Kinderhook, I'd also like to express my thanks and gratitude to Member Lavender and Member Jennings. It's great to work with them over the years. It doesn't seem like that long of a time, but I guess it was. So thank you, and I appreciate your service on the council. Kinderhook's a new relationship in the national program, and it also shows sometimes how these, to get to this point where we're presenting to the council, it sometimes takes years, because we've actually had this on our forward calendar for multiple years. Staff has met with Kinderhook multiple times over the years, and now they're back in the market fundraising, and we can present that in front of the council. Kinderhook's a middle market buyout fund targeting North American-based companies in 3 sectors: light manufacturing, automotive, healthcare services, and industrial and environmental services. We like that Kinderhook is an addition to the national program. The focus areas of the fund actually add diversification to the overall portfolio. Kinderhook's been led by 3 managing directors since 2003 who are supported by an experienced senior team who average 19 years of investment experience. That's going down to the vice president level. The firm's also built a strong culture that's led to minimal turnover over its history. In addition to the industry expertise that they've built up, we like that the strategy is really focused on improving companies through the control buyout focus. A big part of their strategy is improving companies through add-on acquisitions, but they also have a large team of operating partners who can assist with a number of different initiatives to help companies. The firm also tends to source companies away from competitive situations, so the pricing that Chris talked about, that helps drive that better pricing, and they do tend to use less leverage as part of their strategy. The track record is strong across the previous funds. It compares favorably when looking at benchmarks. And I think one of the hallmarks of their performance, too, is the consistent performance over multiple economic cycles. I mean, they've been investing over multiple economic cycles, given the history of the firm, and they've been able to generate a consistent performance over that time period. From a terms perspective, the firm has several terms that are relatively better than other buyout funds in the market, and they also have a sizable general partner commitment, which is strong alignment with limited partners. We're recommending a $100 million commitment to the fund, and with that, I'll introduce Chris McCullough from Kinderhook for a short presentation.
Wonderful. Thank you, Richard. Thank you, Chris, and thank you, State Investment Council, for having us present here. I'll try to keep it brief. We built our firm from the beginning to align with our limited partners, and when we started the firm over 20 years ago, we said, how do we build a firm that has lasting presence and learns from past mistakes so that we can continue to improve our Richard alluded to. It really started with taking the mentality of being investors first. So we have been large limited partners in all of our funds. The GP and our operating partners have been the second or third largest LP across our first 7 funds, and anticipate will be a top 4 or 5 LP in our 8th fund that we're raising now. Our investment team, since we started over 20 years, no one that's made vice president has quit the firm. And we think that's really a reflection of 2 things. One is our culture, but more importantly is understanding that it's a approach to continuous improvement, and such that if you have talented people that are making investments, you don't want them to do a couple of good deals and leave and go start their own fund or leave to go to someone else's fund. Those best people, you want them as part of your fund. So we've spread our economics across our team early on so that everyone participates in the equity carry. Everyone has direct investment in the fund through waived fees. And we pay base salaries that are fixed over the life of the fund, and those salaries obviously
go up when we initiate new funds, but we don't pay for short-term performance through bonuses. We are on our team thinking, what are the best 10 or 12 investments that we're gonna make in this fund? And so if you give a professional extra carry in the deals he or she sources, I can assure you that when they come to investment committee, he or she is going to be advocating for their deal, because of course, that's how they get paid. And what we want for our team is that we are doing, advocating for the best deals for our LPs and us, as being a large LP. So that's really number one in the three legs of the traditional private equity stool is team. And we think we have a world-class team with deep industry experience and continuous improvement. From an industry vertical standpoint, as Richard alluded to, we're in 3 industry verticals that we've been doing really over the last 15 years. And we have, everybody talks about it, you know, how do you find proprietary deal flow? How do you source opportunities in a competitive private equity market? And it comes from building relationships and trust and knowing what you want to buy and having the expertise to execute and convey that knowledge to sellers. We are buying about 70% of our businesses from families that are looking to roll equity in most cases next to us. And it's not just about the price they receive, it's about the partnership they have with us as they look to grow their business, often coming to a partner like us to find management talent and capital to execute for a vision such that when we sell the business to again, they're getting maybe as much in the second bite of the apple as they got in the first. So that industry expertise in our 3 industry verticals, healthcare services with a real focus on the government programs, light manufacturing with a real focus on the automotive sector, not original equipment. We are aftermarket suppliers, think accessories to the back of your pickup truck, light bars, tonneaus, et cetera, and then industrial environmental solutions. And in that environmental space, this is probably our most differentiated vertical. We have a very strong presence building traditional waste management solution companies all the way through hazardous materials, liquid containment systems, wastewater remediation, and really focusing on how do we provide services to industrial, and these are growing areas in our economy, these industrial services, environmental services. So that's what we do. And then the last leg that they refer to is our operating executives. We don't run companies. CEOs, people that run companies, they create the opportunities and the wealth for our team and for our limited partners. And the real differentiator, again, in each of these verticals, what we do is we didn't invent private equity. Private equity's been around a long time. It's the devil's in the details. So we treat our operating partners like the talent that they are. And our perspective and our mentality is we work for them. Our goal is to make them successful. I always use the old analogy, Michael Jordan's the talent, Phil Jackson's the coach. Our job as the coach, we're Phil Jackson, we need to bring the resources to help the talent win championships. And so that trust and alignment with our limited partner, or our operating partners that is, allows them to be successful and come back and work with us. And over 20 years we've been in business, we've now had approaching 10 CEOs that have run more than one company, and probably a handful that have run 3 companies that we've been able to exit, have them work, come back, we find another opportunity and deploy capital for the benefit of our limited partners and ourselves. So with that, thank you for your time, and I will take any questions.
Madam Chair, based on the recommendations of the Council and Investment Committee, Consultant Mercer, SIC staff, and general fiduciary oversight of RBK, I move the State Investment Council approve a commitment of up to $100 million to Kinderhook Capital Fund 8 LP, subject to and contingent upon New Mexico legal requirements, New Mexico State Investment Council policies, negotiation of final terms and conditions, and completion of appropriate paperwork.
Okay, we've got a motion and a second. Motion by member Lavender, second by member Summer. We have discussion on the motion before the council. If no discussion, let's take a roll call vote to invest $150 to
Commissioner Stephanie Garcia Richard.
Yes.
Treasurer Laura Montoya.
Yes.
CFA Secretary Wayne Probst.
Yes.
Nick Tass.
Yes.
Don Bingaman.
Yes.
Tim Jennings.
Yes.
Harold Lavender.
Yes.
Bert Summer.
Yes.
8 votes in the affirmative, motion passes.
Thank you very much. Thank you.
Okay, now we're going to move on to agenda item 3E with a vote on the Next Frontier Venture Fund 4.
So this is a New Mexico program commitment. We're recommending a commitment of up to $10 million to Next Frontier's fourth venture fund. This is a new relationship for the program we're recommending. It's a group that originally started in Utah, they're based in Utah, and has since expanded, Montana, sorry. And since expanded to Boulder and Salt Lake City, and now want to work in the New Mexico ecosystem. When we've been developing the strategy for the New Mexico program and implementing, wanted to have a diverse mix of managers that are in-state, regional, and also national firms that have domain expertise in line with our ecosystem. Very deep tech-oriented, climate tech, aerospace defense, things like that. And Next Frontier, like a number of regional firms in India, and like Kickstart, which is another group in our program from Utah, they've developed in line with kind of what their ecosystem has, and similar to the way that we hope some of our local firms do as well, like Tramway and Life Sciences or Dangerous and Climate Tech. We hope they, longer term, they become regional leaders in their target sectors. And what really resonated us with Next Frontier, and what's kind of unique about the Montana ecosystem and kind of jives with New Mexico, is they've actually had a successful history of commercializing research-backed technologies from Montana State and other affiliated entities, as well as the Idaho National Lab, which we think makes them a good addition as a regional firm in the program. And they've also developed a really nice network of national firms that can co-invest with them. I'll pass it along.
As Chris mentioned, we're looking in the New Mexico program for experienced investors that have a regional focus, includes New Mexico. We've had success in this category with some other managers, and we were excited to work with Next Frontier over the last year. They're a early-stage technology-focused venture capital firm. They started in 2015, focused on Montana, and then in subsequent funds that they've raised, they've measurably expanded their region in the Mountain West to include other states. And in Fund 4, New Mexico is included as one of the target regions that they're focused on. The firm has established offices in Bozeman, Montana, Boulder, Colorado, and Salt Lake City, Utah. The investment team has 6 people, which is a pretty sizable team for a fund of this size. The 2 founders have experience prior to Next Frontier as well. Will Price, who's here, one of the founders, has both CEO and venture capital leadership experience prior to forming Next Frontier. The other founder is a senior leader at Citadel, which is a well-known investment firm. And the strategy is really differentiated with its regional focus on the Mountain West. They really get to know the regions well. What are the industries that fit the regions? Because you want to have complementary industries that fit that region. They also have experiences working with universities and national labs on tech transfer, which is an important part of the New Mexico program and the success that we hope to see from that program. Another thing that we liked in looking at their strategy is when they underwrite a company, they're really driven on an acquisition exit as opposed to an IPO to get performance, which leads to more consistent performance in venture capital. As you know, IPO markets can be very cyclical. Acquisitions can happen whenever you have a good investment that's performing. The track record has been favorable and still developing. When looking at fund performance, they have had some realizations and some success, which is always good to see in a fund that's new. And then the fund terms are largely in line with what we see with other venture capital funds as well. So we're recommending up to $10 million commitment to Next Frontier Venture Fund 4. And with that, I'll turn it over to Will Price. Mr. Richard, Madam Chair, and investment council members, it's a real honor to be here today. First, I want to say I think we're kindred spirits in trying to commercialize companies in the Rocky Mountain region in the West. Montana, when we first started, had no venture capital activity. It was rich in intellectual property and research organizations, both at the university and at the national lab level. But there was a reliance on SBIR and SDTR grant funding to drive technology work. what we've come to realize is that if you take more than 5 of those grants without any venture capital support, the odds of becoming a product-centric or customer-centric company almost falls to zero. So there's a balance needed between intellectual property investments and research and venture capital that can help invest in sales and marketing and go-to-market, customer and market centricity to shift companies away from being lab-centric to kind of market-centric. And I think we bring the investment council on. Will Price, I'm in Bozeman, I've got Kirsten Suthers with me from Boulder, Colorado, and then Franz Kopler. He's our native New Mexican. He grew up in Angel Fire, and the three of us will be covering this market aggressively. Our focus areas are climate tech, deep tech, which in our vernacular really means photonics and areas like that, dual defense, so both military and government technology applications, as well as commercial applications, AI and ML, and cybersecurity. And we've made a lot of investments in those areas. I just will mention a couple to give you a sense. We've got a company called Bridger Photonics that uses LiDAR systems to identify methane leaks in oil and gas infrastructure. Person's on the board of a company called Optera that helps people manage their carbon accounting around scope 3 carbon emissions. We've invested in a company called BioSqueeze, which is a novel material for helping seal leaking oil and gas wells, but real commercial applications. And then we have a company called GrabWell, which is in the cybersecurity space that came out of the Idaho National Labs. So our model is to partner with highly technical founders who want to move out of the lab, have a commercial application, and lead investments in the $2 to $4 million range. And what's really important is to help bring the professional management and go-to-market experience that can complement their technology chops to be able to develop successful businesses. The other thing I'd like to point out, which is a challenge in building companies in the Rocky Mountain West, is that capital is a continuum. There's the early grants from the SBA. Then there needs to be some initial funding from venture capitalists like ours. But if you can't then tap into the national capital markets, the companies become orphans in some sense and aren't able to really develop to their full promise. So I would think of us as connective tissue between identifying promising technologists, early capitalization to drive go-to-market success, but then most importantly, I think in terms of the long-term viability of the business, to connect those companies with national investors who we know very well. We syndicate with over 65 major national firms who've come into our companies and continue to help them grow and be successful. We're not coming to Mexico with a cold start. We've been coming here for a long time. We've been here 5 times in the last 12 months. We've been active participants at the Taos ski competitions. We're close with Dangerous, with Roadrunner, the new studio that just launched. We were there for the kickoff when the 3 companies were announced, with Tramway. We're also well connected with a couple of your other primary investments, Crosslink, Kickstart, Khosla, and Lux. We've worked with them as well. So I think we're going to, in terms of our plans for New Mexico, we have around 21 companies with currently falling in our CRM and our pipeline. We've worked very closely with a large number of investment groups in the area. And so for us coming into New Mexico, the cost to invest threshold is something we're very confident we're going to be able to achieve. We're really excited to be able to come in and continue to spend time in your great state. So thank you very much for having us today.
Yes, number 7.
Do you anticipate that they will be co-investments or initial investments?
Our goal is to lead the investments, and so we believe as a seed investor, we're best served by leading investments. We try to get about 15% ownership. Let's say, for example, it's a $4 million investment. We would probably take 3 of that, and then we could syndicate locally with Dangerous or for a local firm, or bring in capital from out of the state. But as the companies progress, what we tend to do is we reserve follow-on capital to invest our pro rata ownership share in the next round. So let's example, the next round is $10 million. We put another $1.5 million in.
What would it take to open an office in New Mexico?
I think so when I started the firm in Bozeman, I would say we have a real track record of doing that. So first office was Bozeman. The next office we opened was in Boulder. Then we also opened in Utah. And so I think for us it would be, with Franz wanting to go back to New Mexico, could we find someone that we really match with our culture to come on the ground here? But our belief on the early stage investing side is that it's really hard to do it over the phone or by Zoom. You need to be on campus. You need to be in the labs. You need to be attending the meetups. And so boots on the ground is definitely something that we believe is possible, and we've exhibited a trend of doing that. So I think it's a combination of finding the right people. So we introduced the Kirsten through Foundry Group. Franz is the chief of staff at one of our companies. tough, find those people you really believe in that fit the region, so you have the right team fit, because we've had very little turnover in our business too, like Kinderhook. But we do believe that active seed investing requires lots of boots on the ground.
Especially for the, smaller.
Exactly. They need a lot of care and service. And one of the things we found too is sometimes the most technical people are not necessarily thinking about venture capital either. There's almost an adverse selection for the people that reach out to you for money versus the ones that really need it. And so you have to be out in the market, making the case for them proactively to do this. Exactly right.
And we've actually asked, just so it's fair for everyone, we've asked some of our other companies that we're investing into our Mexico PE program, about their intention to help with things like training for entrepreneurs, start to develop a culture of entrepreneurialism, investment, focusing on local businesses, focusing on transfer here to Mexico.
Yeah.
Establishing, I'm going to say it because Kathy's not here and she would have said it.
Yeah. And I think you're right. It's time on campus, time with the engineering departments, time with the graduate departments, time with the professors, time with the labs. Sometimes, like I'll give you an example, Briggs Photonics, we first met them in 2016. We didn't invest until 2022. It took that long for the company to really decide they wanted to be commercially driven and have some commercial success. So these are long relationships that you nurture, and when they're ready, you want them to call you. And so in order to be able to do that, you can't wait till it operates some money.
Seeing that you're from Angel Fire, I was looking for you in the packet. What is your position and how long have you been with them?
So,
what's your name?
My name is Franz Kofler. My title is a partner. I've worked for Will Price and Rich Hargis on the other side of the table. They were on the board of my last company, or a company I was working for called Omni that was acquired by JP Morgan. I've now been with the firm for 18 months.
Further questions? A motion?
Madam Chair, based on the recommendations of the Council Investment Committee, Consultant Mercer, SIC staff, and general fiduciary oversight of RBK, I move that the State Investment Council approve a commitment of up to $10 million to Next Frontier Venture Fund 4 LP, subject to and contingent upon New Mexico legal requirements, New Mexico State Investment Council policies, negotiation of final terms and conditions, and completion of appropriate paperwork.
Your last,
My last motion. I didn't stumble too badly either, did I?
We're going to miss that.
all right, we've got a proper motion by Member Lavender, and a second by Member Bingaman. Any discussion on the motion before the council? The roll call vote on the motion.
Commissioner Stephanie Garcia Richard.
Yes.
Treasurer Laura Montoya.
Yes.
CFA Secretary Wayne Probst.
Yes.
Nick Tejas.
Yes.
Don Bingaman.
Yes.
Tim Jennings.
Yes, good deal.
Harold Lavender.
Yes.
Bert Sommer.
Yes.
8 in the affirmative, motion passed.
All right, great. We are very excited about this partnership.
Thank you so much,
Yes,
everybody.
yes, thank
We're
you.
thrilled. Thank you very much. Congratulations, sir, on your.
Yeah. All right, with that, we're going to move into the last of our voting items today, agenda item 3E, our investment policy review that I believe was tabled or removed from a vote of
That's right. We
maybe in the November meeting or, okay, in the November meeting, and now we are coming back. So there were some concerns shared, and maybe you could start with how you all.
You bet. Thank you, Madam Chair. So there were two items. The first was yours, Commissioner. That's on page 257 of your materials. If you want to run there. The Commissioner asked if we could add a line to this table that's near the top of the page and include the review of the long-term capital market assumptions annually. So if you'd ask for that. I wanted to make one recommendation to you. We do that, Will, but I want to make one recommendation to you to see if you like that one better. So every spring, as you know, we bring you what we call our macro package, and it's that review of the long-term capital market assumptions. We review our risk flex op chart that we use. We review the intergenerational equity positioning of the fund. We review our inflow expectations. That's just started this last year or so. We review our pacing model so that we can show you how much in the next fiscal year we think we need to make in commitments and give you an estimate on how many funds that'll be in the private areas, or in the private asset areas. And then, of course, we wrap up with the annual investment plan. So all that's a package. We do all those things each year, and that's in this table. That's represented by the annual investment plan line in there. Yeah, right. So I can put your line in there, but I probably want to put the rest of these in there, or we can just continue to let it be represented by the annual investment. Yeah.
Well, I don't have a strong preference, by the way.
Okay. And then the second one was Treasurer Montoya. There was some language in here about, and it's on page 64. Oh, I think it's toward the bottom of that page. Right. So the concern was that the CIO investment staff will set interim allocation targets after we've done it. So the way that happens is after we've done an asset allocation study on a fund, typically we move. Or, I've seen asset allocation studies done. I've done them in other funds where they move 1 or 2 percentage points here and there, and it doesn't make too much of a difference. We tend to be a little chunkier when we move our asset allocation. So frequently, the portfolio that we hold today has a sizable tracking error to the new asset allocation. So it makes sense for us to put the interim targets in.
Right.
And we gave examples at the last meeting of maybe we go from 10 to 15% private equity. We might set a target of 11%, or interim target of 11% private equity. When we get there, move it to 12 and so forth. That's generally how it works. So we have that. Now this is not new authority. There's another spot in the policy where it's just not. It says it, but it's just not clear. This is just clearer language about that authority. Treasurer Montoya has some issues, and I'm sure she wants to raise those again. Mr. Lavender was on the other side of that. He liked the language. So we didn't make any change in the one you're looking at, knowing we could have this discussion again. I did want to point out one part of the it's on page 257. That's supportive of this language going in. And under section 6 here, roles and responsibilities. So the council in your policy here defines what its role is. And that's, I think, in that third paragraph. Yeah, responsible for the strategic direction of the investment of the funds, including approval of asset allocation, establishment, and maintenance of all policies, guidelines, and benchmarks by which the office will implement. So that's what the council says its role is here. Now, in practice, you all do a little bit more than that. You look at each of the investments, you interview managers, but those things, are part of the function that you do every year. Then if you go to the next page under the State Investment Office staff, that second paragraph. That's the first paragraph, last sentence. So the CIO has responsibility to direct and implement all decisions required to achieve the council's approved direction. So that's where we draw. That's where we draw that, or why we developed that language, put it in there, right? But those are all the comments I had.
It's almost feeling like there's a little bit of a tension, and I know that in the past there has been this tension that's been expressed as well between like what is the role of the staff versus what is the role of the council to approve. And I think this recommendation kind of touches at that tension again. And so So I believe the treasurer is probably gonna have, want to share some of her concerns, unease around this recommendation. Before you do that, can I just ask a question, because this is something that she actually pointed out to me at the bottom of page 269. So you've gone through what the council's role is, what the SIO and staff's role is. Down at the bottom, under this table, recognizing that a long-term target allocation to alternative asset classes can take a matter of years. Talked about that already. The SIO investment staff will report to the CIC and the council the interim policy benchmark, which will be adjusted. Will be adjusted by you?
Yeah, that's the language that we, that wasn't, not particularly clear. It
And
didn't
so you
say
put
the
the red
CIO does
language
this,
in.
so we put it in, and it's not in the right section.
And what you're saying is that that already exists in our investment policy.
Right, yeah, that's an existing authority that we have. We just reread the language. And we didn't make that clear in November, that was part of the problem.
And if I might, there's also similar language on page 261, the second paragraph, which it's recognizing that long-term asset allocation, utilizing alternative asset classes can take a matter of years to implement prudently. The New Mexico SIC delegates implementation of the strategic asset allocation policy, SIO investment staff, including funding of alternative asset classes and setting interim asset allocation targets. So that specific language has been in here. It's just been added to another section, but it's not new language.
Then why are you bringing this change? You already have the authority to do the interim targets.
Reading through the policy in those two sections, it just seemed like we wanted to make it more clear and in the right portion of the policy with the rest of the authorities that we have in that area, rebalancing and all this. I mean, it's a little bit of cleanup. We can take it back out, and the authority's in there. If that authority's clear, it is additional language, just trying to make it a little more clear.
Thank you for pointing out a couple of the issues. So I had a question, and it was, you mentioned that it's already in here, and I think it's actually the language that was just brought up, but that's under the Uniform Prudent Investor Act, which it shouldn't be there. I'm happy that you pointed out Section 6 on page 9 or page 257. It's the SIC that is responsible, and this has been clearly stated numerous times this last year. We're responsible for the benchmark, and we're responsible for the asset allocation. And there's been question of whether or not we should even be looking at the approval of all these other individual recommendations. I know that's something that has been a thought process that I've heard about throughout this last year of whether or not we should do that or not. But basically, the council has the guardrails. We create for lack of a better term, the Bible of what you can be able to utilize for your investing. And we just approved the asset allocation this last year. My first question is, the numbers that are here on all of those asset allocation graphs are the ones that this council approved this last year, correct? You're just updating it. So we've approved those, so I looked at those, and then I looked at RBK's presentation on page 29 or page 4 of the packet to see how far we are from where we approved to where we are at today. It's never going to be possible for somebody, if they're doing it in a prudent way, to change the asset allocation overnight. It takes time. But this council meets every month, and there should be no reason why this council shouldn't be made aware of the asset allocation that we changed or we're approving to change for them to be able to move forward and do the work that they do day to day. On page 9, it's very clear that the delegation is given from us to the staff to be able to do that. For me, I'm always looking at internal controls and checks and balances. So nothing that I'm saying today is about Vince. It's about the CIO versus the council versus the rules of every single individual that is involved in $50 billion. If a CIO is investing, they should not also be in charge of changing the asset allocation that we have? And if we're approving these little individual amounts for each fund, if the asset allocation has been changed and we're not aware of it, how is that being transparent to the public? And these are tax dollars at the end of the day. So I didn't feel comfortable with it being in the Prudent Investment Act, and I don't feel comfortable with it being in the new language of where it's located, and I don't see why it's not a simple terminology to come to the council to tell us we're going to change the asset allocation, because when you change the asset allocation, you're also needing to change the benchmark, correct?
The benchmarks that you all choose are primarily, you know, the asset class benchmarks, so the various ones there. The benchmark is, yeah, the policy benchmark is our asset allocation.
So I would say on page 21, what is the packet page? 269, it says recognizing that a long-term target allocation to alternative asset classes can often take a matter of years to implement prudently, the SIO investment staff will report to the CIC and SIC the interim policy benchmark, which will be adjusted as SIO investment staff make progress toward its long-term strategic asset allocation. So this tells me, one, we're allowing them to change the benchmark without coming to the council. They go to the CIC and they go to...
But they report to the CIC.
They report to the CIC. So they're already able to change the benchmark. Now we're saying, and I guess we had already been saying...
Wait, let's just clarify. I don't think that language is saying they're changing.
Yes, an interim policy benchmark. You can't benchmark. You are changing the benchmark if you have an asset allocation that you're changing. Benchmark, but you have a different level of how much to get to that point of the benchmark.
Well, I think we're talking past each other here. I think, you know, when the council sets the long-term strategic, they say, this is where we want the portfolio to be. We understand it's going to take some time. Turn it over to staff to get it there. The process of getting it there to keep our tracking error down of the actual portfolio to the long-term strategic target that you said is those interim benchmarks. That's why the council had given the authority to the staff to move that interim as a portfolio.
So, Madam Chair, my point is that the two things that we're told we're supposed to do are do the benchmark and do the asset allocation. And in both, we're delegating our authority when we change the asset class, to change the asset allocation to a higher percentage, we're giving the authority in the interim, which could be 1 to 3 years, maybe even longer, depending on what we put in there, for it to be done at the staff level, without coming back to the full SIC. Second part is that we're also allowing for the asset allocation to be changed without it coming back before the SIC. And in fact, on page 264, the word minor changes is taken out. So if any changes that are made can be done at the other level. So then I would ask the question, what are we here for? What's the point? And where's the internal controls? So I don't agree with the red lining on page 16, both for minor or for that. And I also don't agree with it under the Investment Prudent Act. And I don't see why we can't all work together, see what the staff agrees that they want as the benchmark and the asset allocation interim target, and bring it back to the council, because those are the two things that we are supposed to be responsible for. And with $50 billion, I think it was Mr. Smith who mentioned at the beginning of the meeting, we have to remember our history. And we have to be prudent because it's our responsibility to do so. And so we do depend on our staff for almost everything, but we also have an obligation to do as well. So those are my concerns, and I'll just end this last part with, if you look at page 29, just to put this into perspective, I just want to go to the land grant just because you have the most money that is in that one. If we look at what we did on the asset allocation to where we're at today, it's, and I'm not going to go into like U.S. equity or whatever, but it's 17% to 20%, 14% to 20%, 22 down to 6%, 7 to 15%, 7 to 12, 10 to 12, and 10 to 15. That takes time to do. And if we meet every month, why wouldn't we just all be on the same page as to what the interim target is for us to be on board with what the staff is doing?
Could I follow up, Commissioner? Yeah. So, if you pull that language back out, it'll mean basically no change. I've always operated these interim allocations on the principle of just because you can doesn't mean you should. And I've always come to the council and said, hey, here's what we're doing. And then we follow that up every month in the performance reports where you can see this. So I come for pre-approval anyway. In fact, last June, we had such a big change that we actually had you all vote. So it really means, it doesn't mean much of a change, but it's because I operate under that, I'm going to show you first anyway, principle.
And it does say report, they shall report. Language of reporting to the council is in there. Whether or not we're approving each, interim allocation, not addressed. It's saying that we delegate the interim allocation to the staff and they report to us.
Where's the reporting aspect?
That's 269 language.
So the 269 language is the benchmark. That's the benchmark. The asset allocation has no writing whatsoever of anything being reported back to the CIC or the SIC. And in fact, we removed minor changes, so it could be any changes that are done at that point. So for me, I don't feel comfortable with it as far as I know it's already been there. It doesn't belong under the standards of care on the Uniform Prudent Investor Act, and I believe it would have gone where you're trying to put it, but I don't think that we should be doing that. I don't think that's prudent at all. And it's not about, for example, now, we all know Vince, well, I don't as much, but everyone knows Vince. He's high regarded. He has really pushed this portfolio and done an excellent job. But I don't look at legislation or policy work as an individual. I look at it as a policy of whoever is going to be there at that time and how that works. So it might be Vince's standard, his ethical standard, to always come back and tell us and report. Those SIC reports are amazing as well, whoever writes them. They're really helpful, but policy is very different, that it should be based on actual whoever's in that place, what we're giving them and what we're not. And we're giving a lot of our own authority. And if we're going in the direction of us not doing all the other parts, putting it on consent, it's even more important that we're keeping the checks and balances in place. And the last thing I would say on a different subject matter is this year we approved co-investing, and that probably needs to be added to the investment policy somewhere, and I didn't see it added in, so that's another thing that probably needs to be added.
Do you have any, can you share with us sort of what internal controls exist beyond your personal?
Sure, yeah, Commissioner, so these decisions internally are made, well, I make them, but the report and the research comes from our strategy group, so there's 5 of us looking at all this stuff, cash management, liquidity management, rebalancing, and all those things, with that people.
So where in the investment policy does it say that, as the role is delegated for the interim, where does it say that those interim decisions should back to?
Got a comment over here.
Page 16, right after the new statement that is inserted, since that statement is inserted in the rebalancing activity portion, the very last sentence, the SIO investment staff will report the results of all its rebalancing activity, SIC and even an SIC regular meeting. Very next sentence after the added one says there was a reporting responsibility for all rebalancing activity, and with this statement being put into the rebalancing activity, I would assume that that
qualifies as that umbrella. And I would ask for a point of clarification, rebalancing activity on this packet today, where is that located in our packet?
In your report, Brent's report, we show all of the funds and how they've changed month to month.
Madam Chair, does that include the difference in the target allocation or any change in the benchmark?
No, changes in the for interim targets would be in your RBK performance report.
Madam Chair, is there a definition of interim policy benchmark? Because I can't find it.
In the policy?
Mm-hmm.
I don't know.
It's a capitalized term, so that's what I'm looking for.
Yeah, if you didn't find it, it's probably not.
Maybe that's something that ought to be focused on in terms of defining what the treasurer's asking about, because I have the same reaction that the treasurer has in terms of that issue. And maybe it's just a question of definition and defining the term. But I'm not finding it.
To add to that, on an asset allocation, because it takes so much time, that could be 1 to 3 years. So it's not an interim like 1 to 3 months. It's going to be a lot more longer of a target, which also changes the benchmark so that you don't look bad in the process of what you're trying to do.
We're good, it's gone in our favor.
But when it doesn't.
Exactly.
And I think that's the thing, Madam Chair, if I may. I think that's the point that the treasurer's trying to make is that, you know, when we're all not here, what happens? I mean, just the time that we've been on the SIC, we have a lot of new members, and we're about to have two more new members. So we have to really, in my mind, in my work, like, the only thing that matters is what's written down. And so I think we need a definition for, interim targets. I think we need to include a little bit more robust language on internal control and how that looks. And then the other thing that I didn't see in here was strategy. Again, you know, my experience and understanding of boards and fiduciaries and things of that nature are the most important things we need to be working on are policy, strategy, and just fiduciary oversight. And that strategy part is something over the last 4 years they haven't really, we haven't done a lot of that in the council, and I don't know where proper place is for that, if it's the CIC or if it's actually here in open meetings. But I think we need to focus on strategy and spelling out these roles and responsibilities so that we can get to the place where our strategy is a roadmap to where we think we need to get. Because in hearing this, I think it doesn't do me any good when we set long-term benchmarks, but we have interim benchmarks, and we never get to the point of reconciling those two things. I don't know if we do. Do you think we do?
Well, the purpose, and I'm glad Member Summers brought up the definition. The purpose of these interim targets are just to reduce that tracking error from our portfolio. Yeah, it is, right. So that's all, that's the purpose of it. It's not to counteract, any we all make on the long term. It's just simply to reduce that tracking error, keep the portfolio performing closer to,
That where we're introducing, and language is already in our investment policy, I get it. But do you see that where we're introducing, the staff kind of taking direction on their own, there are questions of like, how is that tracked? How is that monitored? You see where questions like that would arise, and where council members want to have a comfort level of, what exactly is being delegated and how often they'll get to have an update on it. And whether that's being done already monthly, maybe we should
we've asked
bit more explicit about that. So this is my request, and I don't know how to do this officially, Evan, so you just tell me if we need a tabling motion or whatever. But I think we need to go back to the drawing board on some of these things that have been raised today. And I'm wondering, I know she's not here, but I'm wondering if the proper place to do that is maybe in the governance. The governance committee could possibly have a meeting with folks Kathy is the chair of that.
She's vice chair.
If we could do that in the governance committee, maybe have some of these issues, ironed out there to the comfort level of council members, or just to a level where, it feels like we have proper oversight and we are doing our due diligence, with maybe more explicit language, maybe definitions, I'm not sure. But is that something that...
Madam Chair, I was gonna raise this issue as new business, but since you're raising it today, I think that that's where it needs to go. I think that we ought to have a discussion at the governance committee and bring it back to this committee as a whole. To talk about it. With the assistance of staff, I'm sure that we could get to the definitional terms that we need to address it.
But words matter.
Well,
Words matter. So...
yeah, what I'm hearing is this council just feels differently. Previous councils that approved that council feels differently.
You need
So
to
it's
look for
completely fair to
explicit
have it done.
language on what exactly our oversight is.
Madam Chair, I move we table this and proceed according to what you've just suggested.
Okay. All right, so we're gonna table this discussion for now in this vote, and I would assume...
Second.
Yeah.
You got a vote?
Okay, so we've got a motion and we have a second for tabling this vote, voting matter. And, let's take a roll call vote on the tabling motion. So yes to table, no to carry on as written in the agenda.
Jennings votes yes.
Thank you, Jennings.
Commissioner Stephanie Garcia Richard.
Yes.
Oh, you're gonna roll call.
Richard Laura.
Yes.
CFA Secretary Wayne Probst.
Yes.
Nick Tass.
Yes.
John Bingaman.
Yes.
Tim's already voted. Harold Lavender.
Sorry.
And Summer.
Yes.
8 in the affirmative to table.
Right, so I appreciate you...
Madam Chair, I'll get with Kathy
Yep,
and
I
Mr.
appreciate
Messina, and we'll get with probably Evan and Vince to work on this, because I think it needs.
I would suggest John to,
Okay.
We do have
I apologize, guys.
Sorry.
Okay.
Madam Chair, may I just make a comment?
Yes.
Thank you all for, listening to all of that. I didn't know that Senator Jennings was on, and Senator Jennings, I just wanted to thank you for your service. Not just now, but growing up and working in the legislature and watching you, work. I really appreciated the lessons I learned even through the observation. I know Nick was listening too, because we were working together as staffers back then. But thank you very much for your service to New Mexico and for your insight and how you help the South.
And Member Jennings, if you'll just stay on a little bit longer, we're gonna do our love for you maybe during old or new business. It'll be up to you whether you decide that you are old or new. We're gonna move on now to, hear from our CFO on member agenda item, 4A.
Commissioner, I'll be, as brief as I can. Just a couple slides I want to touch upon. I'm on page 287. As I try to do every month is provide a budget to actual as well as an investment holdings report. Nothing really to add on the budget to actual. I think John's already alluded to hearing we had regarding fiscal year 25, and I feel very good about that. I think he also on page 294 of the investment holdings report mentioned that we topped $50 billion for the first time. I think he must have been waiting in the wings to come on just as we hit $50 billion. So
Harold is going out on a high note.
yeah,
You told me it was all you.
yeah, that's true. And I would point out I met with John yesterday, and we do watch variations, and he's asking about whether or not it could easily drop below the $50 billion in the near term. And my answer to that is, it depends on what the market does. Of course, if we had a big market drawdown, it'd probably go below that $50 billion. But I wanted to point out that at the end of January, and I think the Treasurer is well aware of this, we have two significant inflows coming in, one for the Tax Stabilization Reserve Fund and another for the Early Childhood Education and Care Fund, totaling $1.8 billion. So we have those coming in at the end of January. So my question regarding interim fluctuations below $50 billion, I'm not seeing it anytime soon unless the market draws down. And then finally, I wanted to just point out within this order of the investment holdings report, and I just want to make sure if you go in and look at the detail of those reports, since December falls on a quarter end, you will not only see a monthly roll forward for the various funds, you will see a quarterly roll forward for the various funds. So depending upon whether or not you're looking at the monthly or the quarterly really depends on what your starting value is. It's either an ending quarter value or the prior month end. And then lastly, on page 369, I just wanted to point out we did include the audit report from Moss Adams. This is an annual report. It was filed by the deadline. I just wanted to point everybody out on 369 to 371 is the opinion. It is unmodified. We're very proud of that. If you go to page 443, there's also a report on, there's some discussion earlier about internal control. There is a separate report on internal control. I just wanted to point that out to everybody, just the high points of the audit report. And then on page 446, I wanted to point out something that my staff and I are very proud of. No findings this year, and that's something we all strive for, so thank you for that. I did want to point out, I know John alluded to the fact that we're going to be staffing up. We have some vacant positions. We have been, at least over the last couple of months, certainly since Steve has left, have been pretty shorthanded. I just wanted to recognize my staff on the investment accounting side, Nicole, too, Andrea, Norma, Rita, who works directly for me, has been doing double and triple duty. I think Charlie would agree with that, and I really appreciate these individuals. And then lastly, I just wanted to tell Harold and Tim we're going to really miss them. I've appreciated working with both of them. They brought different views, and I think this is what the council needs. And I just want them to know Harold's from Highland High, as am I, and we've talked about that a lot. He graduated a few years before me, though. So, but thank you, Harold. Thank you, Tom.
Thank you.
That's all.
All right. Questions for our CFO, yes.
I don't think we give you enough time or enough credit. I know we focus on 50 billion and that's huge, but really their budget is 67 million. That's a lot for a very small staff to undertake, and also with all of the positions going back and forth and just trying to get positions. I know how hard it is because we're just trying to fund our unfunded ones, so to get 6 is like, ooh, and to have a clean audit takes a lot of work. It's a yearly, day-to-day process to be able to do that, and I give you kudos because that's really hard. It could be a simple little mistake that just gets off that one audit report, but I really appreciate all the work that you guys do on the budget side too.
Thank you for that. And I also wanted to tell Secretary Props, and I've CC'd him on some emails, our ACFR analyst, Richard Torrance, we've had him for, I think, the last 12 years, and the guy, I don't know how close he is to retirement, but he's one guy I'd keep my eye on. He's a great part of your department, and he is he provides us such great service, and we truly appreciate that.
All right, any further questions? hearing none, we'll move to, our closing matters. We'll go to older new business, agenda item 5A. If anyone has something nice to say about, Mayor Jennings, now is the time to do it. All right, Member Bingaman.
Madam Chair, Member
Could you take a
Jennings-
little longer time?
That's the way in the internet.
I had to prod people over here, Tim.
It's been an honor to serve with you, sir. I really appreciate your service and your humor that you bring and just keeping us in a positive frame of mind in these meetings, that you'll be sorely missed.
Madam Chair, I've known Tim for a long time, and he actually served in the state legislature with my brother-in-law a long time ago. And I just want Tim to know that I really appreciate, we didn't always agree on everything, but, you know, the fact is we could work with each other and get things done. And so I'm sorry you're not going to be here as well.
You know, I did have one thing I'd like to say as a parting gift. I put this gentleman, Rob Newell, in to look for you all to look at for a job. He's a friend of my attorney, but this guy's a Rhodes Scholar finalist, went to Yale Law School, Stanford to get MBA, and he was a summa cum laude at Harvard, which is the top 1%. Hope you guys will look at him. You know, I've met him a couple times. He's really an outstanding individual. So I know you have his resume. He just really wants to move to Santa Fe. Doesn't want to have to go to Colorado. So he's a good guy. You know, I appreciate that. Thank you all very much for all your kind words. But we're still going on here in Roswell. So.
All right, well, we appreciate that recommendation, Member Jennings and Member Rosender. I always associate certain members with sort of like their tagline, the thing that they're always going to stand for. You know, Kathy Allen is about our entrepreneurial class, and they are. Harold, for me, you always, have that, the assurance that we are a fiduciary. We do have to stick to that fiduciary, responsibility that's named out in the Constitution and in the state statutes. So I hope to embody that, moving on, so that voice continues to be here. And for Member Jennings, it's always looking out for New Mexico, ensuring that we are investing right back here in our state with this $50 billion fund, or series of funds, I guess, is accurate. And so we hope that we embody the good parts that you brought to this council. And we're going to be, grateful not to have the cantankerousness of so you're, a few hundred miles away, Tim.
Yeah. Well, just be sure you go sign your forms over to Secretary of State, your financial disclosures and stuff, so nobody gets any more trouble. I've signed mine, and although it might be over now, but it's done. So, thank you all.
That's a great reminder, Tim. We appreciate it.
Charlie's got one, a reminder to us too.
We'll go with the secretary, and then we'll go with, Member.
Madam Chair, just very briefly on one other piece of old business. Obviously, I was not here on the December 27th, that December 27th meeting, when John was unanimously chosen as the new investment officer. I want to make it clear for the record that if I had been here, the vote still would have been unanimous. John, congratulations to you. Excellent choice by the folks who were here on the 27th. Wish you the very best. Thank you so much. All the support from me.
Is Mayor Jennings still on?
Yeah, I'm still here.
Mayor Jennings, Senator Jennings, Mr. Pro Tem, just wanted to say thank you for everything you've done for New Mexico. You continue to do so. And I really do admire your work on helping to steer the SIC to the place where it is today. And so just wanted to say my thanks, and we know we'll see you everywhere, probably. Thank you.
Yeah. We have a good crew. It's good. So it's, they do the work. So That's fine. We have a real good staff. It's good.
Madam Chair,
Thank
matter of new business, I'm wondering if we could have Evan give us his view of the education retirement versus Romero case and how it affects this council and our budgeting. And I don't know if you want to do a report separately or not, Madam Chair, but I mean, however you'd like to address it.
There is greater flexibility after that decision with respect to boards such as pension funds and us, potentially with respect to appointment matters, patient hiring, that kind of thing. The ERB has slightly different language than us, so it helps. Different language that says basically officer of the administrative office. There's analogs, but it's not identical. As to how that plays out, that's a policy decision to some degree for the council, investment officer Clark, as to how collaboratively like to think about those issues. But I think it's progress for all investing agencies. So, and directly applicable to the ERB at this point. Their specific language, and we have sort of analogs, but again, exact same language in our statutes that ERB has.
Madam Chair, what I'd like, if it's acceptable to the council, is have a memo that addresses the differences in how it might affect this board in addressing its budgets going forward to give guidance to Clark, because I think it'd be helpful from a policy perspective for us to address it.
And Madam Chair and, Member Sommer, I'd just like to add to that, that case gives, ERP more flexibility for their hiring, which creates more challenges for SIC to both keep track staff, which we know has already been a challenge. So, that is something, that we should address.
ERP and para.
Yes, yeah.
I'm gonna just make a suggestion. I'm happy to do the memo, talk about it. I'm not sure I would advise it in that. I'm not sure it's in the board's admission if you want flexibility with compensation to things, or have any sort of admission as to whether it's allowed or not. I wouldn't want to hamstring you. What I'm telling you is it's an open issue. You don't have the language, we're in a better position, and I wouldn't want to go further than that, but I'm going to.
What you just said there, put that in the memo.
That's what I'm asking for. Okay, thank you, Madam Chair.
I have one thing of new business. We had mentioned the local government investment policy. We did add in that medium term for SIC. Governor signed it on the 3rd, Board of Finance approved it, I signed it, and now our team is working, with the SIC team. They're gonna meet this week to go over, transfers and how we wanna get that done. And I also wanna introduce everyone to my deputy treasurer, JR Malakia Safaye. In the office, so if you ever need anything and you can't reach me, by all means, call JR and he's happy to help you.
Nice to meet you, welcome. All right, anything further under this agenda item? Hearing none, we're gonna go to agenda item 5B, which is, announcement of our next state investment council meeting, I believe here in Connecticut, Tuesday, February 27th at 9 a.m. And with that, Charlie, do we have anyone signed up for public comment either online or in person?
Do not, Madam Chair.
Sure.
I had a thought. With Amy Chavez Romero coming on, who's outstanding, who I've talked to, understands all the legislative council service, all the drafting, all the language. That might be, that memo, I might suggest is a perfect first assignment for when she starts. She should start Feb 20.
I'm perfectly acceptable with that, Madam Chair.
Wait on
I just would like to
that.
have
It might not be
that
for the
memo.
next meeting. I think she might be the perfect person in terms of understanding the interplay between all the agencies and what she's seen. And if you're okay waiting a month, potentially past next month, that might be a perfect first welcome to the jungle kind of assignment.
Great.
Sounds good to me.
With that, do we have a motion for adjournment?
So moved.
Motion and We are adjourned.
We are adjourned.